Hello and welcome to another daily Forex market review. My name is Derek Schimming, and this review is for Friday, February the 15th. Now, I'm of course going to be focused on the euro-yen again today, and frankly, it is the yen pairs that are creating the greatest opportunity in the market for us as traders. We see the pound yen, the euro yen, and the Swiss yen are trading with the greatest amount of volatility and with the highest average daily trading range. Clearly, these are the pairs that are in play and providing the best technical signals for us to enter and exit trades. Starting with my currency strength index, you can see clearly the yen in blue had a lot of volatility on Friday. Now remember, it was Tuesday that we saw an unusual event in the yen where it staged a very strong rally to the upside. I think that at a minimum, on a short-term basis, that marked maybe the end of the slide in the yen itself, and on a longer term it may be a little bit more substantial than some of us realize. You do see that on Friday the yen continued its strength, and they had that buy came in on Tuesday, and then we had the yen showing a decent amount of strength both Wednesday and Thursday. Coming into Friday, it started Friday again on the up move. You can see during the Aussie and Tokyo markets, and even going into the London time frame. Right in here is when it really the first 2 hours of the London markets is where it eclipsed and moved to its greatest point on the day. However, it did lose momentum during that time frame as well, and you can see that it started to trade down. As we got into the New York session, it was really moving somewhat sideways, moving down from its highs, and then we saw a reversal of what came on Tuesday. Not to the same degree, but you can see that the yen took a massive slide down and moved from a level of, I think this was 50, upper 50 range, or 54 on my CCYX here, and it ends up going to a minus 60. It's an over 110 pip reversal on the yen on the CCYX display, which is fairly substantial. Now, being that there was Friday, seeing how the yen has overall been in a downtrend, and knowing that it saw 2.5 days, or really 3 days of strength, a lot of this may in fact just be profit taking going into a 3-day weekend due to the US holiday on Monday for President's Day. Now, if we look at this and say, as traders, what should we have been noticing? It really becomes the same, that's why I say we have to focus on these yen pairs, because we're looking at the same thing almost every day. We have the yen making a strong move one way, and it really becomes what currencies are moving in the opposite direction of the yen on that particular day or that particular market segment. Look at the bottom of the run. You can see that the euro in red and the Swiss in white were both moving to the downside if we start talking about that same time frame during the Tokyo market and the early London market sessions. When you look here at New York during that time of day, when we see the yen making that move to the downside, then it's really what is moving to the upside. Now let's clear this out a little bit. Let's take the New Zealand off of here, we'll take the CAD off of here, and we'll take the Aussie off of here. Obviously the Aussie is moving very much sideways. You can see it in orange back in here. The CAD pairs I don't think are really in play as far as average trading range. I don't think they're attractive pairs. New Zealand, same thing, very small trading range. The New Zealand dollar moves consistently, but the pairs are very difficult to trade because of their minimum amount of range. So if I come over here to my to the adjustment tool, and you see I remove the New Zealand, the CAD, and the Aussie. Let's clean that chart up just a little bit, removing 3 of the 8 major currencies and really focus on what was happening there. So again, you can see the yen. The yen really stands out on the chart, and that's how your eyes should be drawn to this overview tool. And then looking at when the yen was moving up, we had the euro and the Swiss moving down. When the yen was moving down, we had just about everything moving up in seeing convergence between the yen and the other 4 currencies that are currently displayed: the pound, the euro, the Swiss, and the dollar. Now, trades on during the New York session at least, I found myself short in the pound yen. And even though I go through these dissertations each day and discuss the euro yen and really use that as a focus, that doesn't mean it's the only pair to trade. It's been the most obvious, and it's had the greatest trading range of all the pairs. As I said in earlier videos, the euro yen, pound yen, and Swiss yen are moving by far with the greatest average range, and in that order. But in no way or shape do I mean to imply that we would only trade the euro yen. The yen pairs are in play. So when we were looking during the New York time frame, and clearly the yen was moving lower, it was what was moving up with the greatest amount of strength. Where was my best opposing currency to the yen? And if you look, it really does become the Swiss or the pound. I mean the euro or the pound. I chose the pound because it was accelerating and hadn't seen the downward move in the earlier sessions. The pound had started, if you go back and look from rollover and into the Aussie and Tokyo time frames, go into London, the pound was trying to show strength. It wasn't the strongest currency, but it had already shown some form of strength. So when we come into the New York time frame and we're looking for something that is strong to trade against the yen, the euro had been moving down. The Swiss had been moving down. So to team it with either of those would have been expecting them to change course. Now clearly they did, but it was easier to take a trade in a pair that was already showing some strength and regaining it, as opposed to a currency that was moving down and now we're expecting to move up. And it proved to be an outstanding trade. So again, I'm focusing each day looking at the euro yen because I think it's the most obvious and it's one that we all look at. Some of you don't even trade pound yen, possibly. But a lot of traders will look at and do trade the euro yen pair. And if you don't, you probably should. So let's jump over and we'll take a look at the pound, or the euro yen over. Now this is the same chart I've been bringing up each day, and going back to October, November time frame, you can go back on this thing 6 months. You know the euro yen has been in a strong uptrend. That's because of the weak yen. We have had an unusually strong euro. We've seen divergence between the euro and the pound, which is unusual, and we've seen divergence between the dollar and the yen, which is unusual since the start of the year overall. Now, you can see this trend line that I have put up. Again, this goes back further than I'm showing here, but just trying to focus on a little bit more recent time frame. And obviously what I am choosing to focus on, and every trader, if you're looking at the yen pair, should be focused on, is the behavior since the middle of January to today. And that is the area I have in the box. I know my uptrend has been broken. We got into this double, triple top, head and shoulders, 1, 2, 3 pattern. They're all displayed here. There was divergence up at the top of that move. We had divergence when we came in the bottom of this box. There is an unusual opportunity facing us here. And so it's really which way is the yen going to break when it decides to leave this transitional period. You can see that it broke the uptrend. What was the uptrend then became a resistance point. What was support became resistance. Again, this is providing an unusual opportunity. Now let's focus just on the area I have marked in yellow. Bringing the pair to this, blowing it up to this junction. And this goes back to the end of January, basically, is what I have here on the screen. And I have the major areas of support and resistance noted. Now, I did not mark 124, although 124 range for the euro yen has been providing support. The reason I have it down here at 123.50 was in this middle section here, when it did the 1, 2, 3, when it gave that topping pattern and had divergence. Here's your high, a new high, and that double top high. Look at how the oscillator was clearly demonstrating divergence. This is a very important key to note, and this did show that there would be a change, or a potential change in direction of the pair. So not only am I topping out and failing to continue with the trend, not only we're starting to break the uptrend line, but we have clear divergence demonstrated in the pair. And that was that 400 plus point reversal that the pair saw and came down and broke the 124 that had been showing support and resistance. It broke that just barely and got down, and I think the low trade at on my system was 123.42. So that's marked right here, these 3 low points. And again, as it's setting a new low, lower low, and lower low still, we again have a divergence indication on the oscillator. Another key point. Divergence is not the end all. Divergence is not a guarantee that something is going to change direction. It is a very strong indication of. So when you're dealing with a bottoming pattern or a topping pattern and it is teamed with divergence, the lack of divergence or the presence of is going to weight my opinion or my anticipation in what is most likely to happen. And again, as I repeat almost every day, your job as a trader is to look at and anticipate the possibilities and then to react to what is actually happening. Problem is, traders are just far too busy trying to predict than they are to anticipate and be prepared. It's like taking your umbrella with you when you leave the house if you think it's going to rain. It rains in the forecast and you believe it may rain, so you're anticipating that and you take it with you, as opposed to walking out the door and no raindrops falling, but yet you open up your umbrella. The difference between predicting and anticipating, and I strongly urge you to try and get in more of an anticipatory mood and stop trying to figure out what's going to happen and making decisions based on what you think market's going to do, what the market is going to do. So this becomes a pretty substantial situation, the 123.50, and that's why I have it marked. Now I've got grid lines at every 50 pip increment, but then the 126 is also substantial, and then I've marked 127 because this is the point that has been trying to reach from and reach to and achieve, and that's what's keeping it down. Now we did have those two moves above the 127 mark, but they become kind of an anomaly at this point unless we can get back to the upper end of the range. So here's where we're going into next week, because as we look at it, the pair closed at 124.94. Let's just call it 125. So it's closed smack dab in the middle of all this. And as traders, that becomes somewhat of a dangerous location. When I've got something that's ranging, I should be attracted to shorting it when it's at the top of the range. I should be attracted to going long at the bottom of the range. I'm buying off support, selling at resistance, unless it is demonstrating the ability to break above or below those ranges. And then again, we talk about breakdown and breakout rules and proper way to do that. You don't take something just because it passes a level. That's how you find yourself in a false break and in a lost trade. There is a specific way to properly approach a breakout and breakdown that takes it from a 50-50 dice roll and creates one of the highest probable trades a trader can enter in the market day. We'd love to see this at one end or the other. The problem, since it's in transition, that when we find ourselves at the top or the bottom of either end of this level, so if we find ourselves back over 126 and approaching 127, or we find ourselves breaking below 124 and approaching 123.50, then we really can anticipate that it may do a breakdown or breakout, because it can't consolidate forever. And this becomes a very interesting fact, or it should be intriguing fact for all of us. The other thing that's very important to note is what happened on Friday and seeing the low trade that was established, because it did take out what was obviously support. We traded below the 124 and we traded below the significant support level that was set in the 123.50 range. This may be another anomaly, but I'm tending to think maybe not. The key here is going to be whether or not we see continued strength when we get into the new week. Not expecting a lot on the open, not expecting a lot on Monday because of the U.S. holiday, but from Tuesday on, will we experience renewed yen strength? Or was the 3 days of strength, the Tuesday, Wednesday, Thursday time frame in the yen, was that just an isolated experience? And was the profit taking coming out of that, was that really just profit taking? Was it just massive trading in and out of the yen on the intra-week basis? We will see. I would like to think that the yen has turned. I would like to think that we are going to get into a period of yen strength. That doesn't mean that's the only thing I'm looking for. It means I would like to see that. And the reason I say is and I said this in previous lessons here, the fact is, if we get back up to the upper ends and we're breaking above this 127, we're getting into uncharted ground. And this pair has been moving to the upside unrelentlessly for over 6 months. We come up to an area where we're out of air, if you will, and really in unknown ground. If I break down and take out the 124 and 123 level, you can look at solid areas of support along the way and some great targets to trade from or to, either or. And this creates what I think is a better opportunity. So that's what I am anticipating. I can see this thing going either way. So that's my anticipation. I have a preference what I would like to do, but I'm going to allow the pair to tell me what I'm going to do based on the strength and or weakness of the yen and the progression of the pairs, whether it's trading back down to 124 and below, whether it goes from this 125 and sprints up to 126 and above. It's right in the middle of the range. That makes it the most dangerous place to be, is in the middle of a consolidation, because it could go either way. So we start the week with a little bit of caution. And this again, I'm focusing on the yen pair, the euro yen, as my example, but you can see this in all the yen pairs. So we need to start the week with a little bit of caution. We need to allow some of the people to come on the dance floor before we do and see how the pair is going to behave before we make some decisions. That would be the prudent thing to do. If it's moving up and gets back up to that 126 level, 100 pips away, then we know that there's potentially some additional yen weakness, and we'll probably be trading up to the upper end once again. If it trades down to 124, that means there's some yen strength, and we would be anticipating it trading lower and possibly taking out this low range, which I think would be an exciting opportunity. The best way to see that is looking at my currency strength index. And so again, I'll close this video by giving you an invite. I want you to post questions on these videos. Anything that you're looking at as you view these, if you have some questions, post them to me, and I will answer and review and answer those questions in future videos. Send an email. My personal email is listed on these videos, DerekSchimming@gmail.com, and you can send in and ask for an invite to come on the floor. Watch me do my analysis on a daily basis. Watch how we approach and trade these pairs, and watch how we produce consistent returns on a daily basis in the room together as a group of experienced traders. I don't want you to feel that there's a ton of trades and we're just going crazy. I'm a very conservative trader in a very aggressive marketplace. I only placed 15 trades last week and called in the room. I talk about what I'm doing before I do it. I post my trades. I'm very vocal about what I'm doing. When I make a trade, I post it. There was only 15 trades I called out in the room last week, but yet we still averaged over 25 pips net per day each day last week. We also only had one trade that did not produce positive results, so it's 14 out of 15 trades, more than 25 pips earned on the day, and traders are learning how to do this for themselves, learning to stand on their own 2 feet, learning to be a more experienced, more well-versed, more profitable trader with greater consistency and a basis of patience and discipline, learning to anticipate instead of predicting, and learning to definitely take the right signals at the right time and looking for the better trades. You do not always have to be in a trade. As a trader, it's a misnomer. You don't have to overtrade. It's being consistent and being conservative, and definitely following some proven methods and proven strategies for success. So send me an email, post your questions. I look forward to it. Let's have a great and strong week in the marketplace, and as always, I want you to have a great day trading. Thank you.